Good afternoon, everybody. Welcome to this week. And well, oh boy, what a week it has been. Oh, it's Sunday already. This is a long weekend for those of you south of the border. It's the Memorial Day weekend in the US, which means that hopefully Trump will be playing golf tomorrow and not causing chaos. Oh boy. Of course, Trump will be our top story tonight because tonight, this afternoon, he'll be our second top story. You know what? This is a Canadian stream. Our top story, it has to be the playoffs. We got Edmonton and Dallas hitting the ice. Actually, they're playing right now. And last I looked, they're currently in the first intermission. And Edmonton, after one period of play, is two. Dallas, Dallas is a goose egg. So the series is tied up. Those of you who saw the game, last game, Edmonton shut out Dallas. Maybe they're going to do it again. This 4 periods without Dallas scoring. So let's silently cheer or loudly cheer for Edmonton as we move through the day. But our top story, oh boy, I want to get to it. Normally we chat for a bit, right? That's great. I love that. But I have a feeling this story is going to come up pretty darn fast. So we might as well just jump into it. Let's get into it. Let's see what kind of chaos Donald Trump has pulled. Oh yeah. So this time it's not tariffs. He is retaliating for the DST, so the digital sales tax. So, and this is something that was baked into that one big beautiful bill. Oh boy! Now it did pass the House narrowly. We actually didn't. We were hoping it wouldn't make it through, but it made it through. It got through with a vote of 215 to 214. So you can't get any closer than that. You can't get any closer than that. Now, there's some stuff in it that's pretty bad, and we're going to get to that in a moment. But I do have to point out, it's not law yet. It still has to go through the Senate. So there's hope. There is hope that this bill is not going to make it through the Senate. Now, we do know Trump will definitely be in there bullying people to try to get it through the Senate. So we'll have to see. This is a bill that should not make it through, and it scares me that it could. It scares me. But as I said before, the part of the bill that we're looking at, the section that we're looking at, what is it, 813 or something like that. It's in the 800s. In a nutshell, oh boy, it's a retaliation against that digital service tax, and he said he did. And I quote, he said that, I'm not going to quote, I don't have it directly, his text. But he said if we repeal the DST, he will remove the changes that he is going to be making. The changes that, oh boy, are attacking us. Not Canadians in particular, but this community, investors. It's not good. It's not good at all. Oh boy. So there's kind of two prongs to it. He's attacking businesses and he's attacking individual investors with this bill. So we'll start with the businesses. So currently, under the Canada-US tax treaty, Canadian corporations receiving dividends from US subsidiaries, they face, depending, it can be higher, but the best deal they can get is a 5% US withholding tax instead of, well, the regular number is 30%. So he wants to override that. So he wants to, each year, he wants to add 5%. So if a business is paying 5% withholding tax next year, it would be 10%. Following year, 15%. And he wants to keep it going up by 5% every year till it gets to 50%. Now that's 20% above the normal line. And this is what he's planning to do. Now, this is not good. This is not good. Businesses are not going to like this at all. This is going to be really, really bad. So we're talking higher tax costs on cross-border profits, less capital flowing to Canada. some Canadian corporations, they may actually be forced to restructure or pull investments from the US entities to avoid some of that punitive taxation. It's not good. It's not good. Dividends repatriated to Canadian companies could be reduced by half before even reaching the Canadian side. So this as well could impact what we see on after after they pay the IRS and then their expenses. Yeah, it could definitely impact this. This could absolutely hurt overall returns, shareholder payouts, and just general competitiveness of Canadian multinationals with any kind of U.S. exposure. So that's businesses, and that's bad. That alone is bad. But oh boy, it does not stop there. It does not stop there. He's taking another step further, and he's going after individuals too. So currently, individuals are currently paying a 15% withholding tax on U.S. dividends in non-registered accounts. And that, of course, is thanks to the tax treaty. Now, keep in mind, under the tax treaty, the TFSA is seen as a non-registered account. So right now, 15% withholding tax. Now, he wants to ramp that up to 50%. That's right, 50%. He's going to do the same thing, 5% a year. It's actually Section 899. I did write it down. 899. But he wants to take that. So 15% up to 20%, 25, and so on, up to 50%. Oh boy, each year until until half your dividend IRS, half your dividend you. That's not good. Now, obviously, higher taxes on U.S. dividends. This is a big hit for anybody holding U.S. stocks in their non-registered accounts. Big hit for sure. In fact, $81 billion impact. That's what they're thinking. They're thinking about an $81 billion impact projected over 7 years for Canadian investors. TFSA, of course, they'll get hit hard because they don't have, and they're the same as holding it in a non-registered cash account. Now, the RRSP. This is where things, and I've heard a lot of panic online. I've heard people going, "Oh my God, are they going to start taxing? Are they going to start withholding tax in the RRSP?" It's kind of gray, and they may. Right now, it looks can be deceiving, but it does look like the RRSPs may retain that treaty protection. And that's good. That's good. But there's enough gray in this bill that it could get challenged. It could get challenged. So this is going to have a big impact, I think, on all of us. On how you invest. And here's the thing, though, guys. Here's the thing. It's not, you might be thinking, oh, I'm fine. I just invest in Canadian ETFs. I'm good. Well, here's that thing. Those ETFs that you're investing in, if they're holding American companies, they're going to be losing more of those dividends. So 5% each year. So right away, you're not going to see a big hit, but it will be getting cumulative as we move forward. So yeah, everybody will be impacted this one way or another. So it's not good. Now, let's talk about the DST. That's what Trump wants. This is a bullying move to get rid of the DST. He's actually calling it basically a retaliatory tax against that DST. So if we get rid of the DST, this all goes away. Everything goes back to normal. Woohoo! Fantastic. Now, I'm not a fan of the DST personally, so I'm okay with that going away. However, I'm not a fan of Trump bullying us. I'm not a fan of him playing games with people's lives, with people's investments, with people's retirements, with Canadian pension plans. They have a lot pouring into the U.S. when it comes to investments. I'm not good with that. I'm not good with any of that. And Donald Trump, he is he's being a big old dick. There, I said it. He's being a big old dick, and he needs to stick his head somewheres where it doesn't shine. He needs to stop doing this crap. He needs to stop. Now, as an investor, I'm going to say to the government, I'm going to say to the liberals, look, guys, kill the DST. Just do it. Yeah, I know you shouldn't give in to bullies, but oh boy, this is a pretty heavy hit. So I don't know. What do you guys think? Do you guys want to see the liberals bow down and get rid of that DST? Now, I've got issues with the DST for many reasons, but this issue here is coming down to, you know, do we back down or do we go with elbows up? I don't know. You guys will have to tell me. But that's our big story. That is our big story. Don't worry, we got other stories, but I wanted to get that one out right away, because it's well, for two reasons, honestly. One, there may be a few of you who are only here for the intermission of the hockey game, so that at least that way there, I got this across to you guys. So that's fantastic. That's fantastic. All right, now, oh boy. Now we can hit the chat. Jonathan in first. Am I late for a tax hike? No. Trump has tax hikes for everyone. You get a tax hike. You get a tax hike. Everybody gets a tax hike. It's yeah. It's yeah. Bismarcky is in the house, and let's see. It's still early Edmonton. Yeah. And right now I got a little thing up here. So there's still 5 minutes left in the first intermission. So I'll keep tracks. If you're not watching the game, but you want to know how it's going, well, everybody in chat, you know what? If they score, throw in some emojis or celebrate any way you want. I'm okay with you guys going a little crazy. I'm okay with that. Mario says, good afternoon, everyone. Uh-oh, I forgot to turn off the night bot. Ignore the night bot. Actually, I think I can do this right now very, very easily. I should be able to turn off Nightbot. Let's see here. Hello, Nightbot. All right, there we go. I turned off the Nightbot, so we shouldn't get any more of that. All right, and Rory saying, yeah, 2-0 Oilers, first intermission, a long way to go. MC is in the house with a good afternoon. Bonjour, MC. We got a good afternoon from Paul, and we got Mary in the house saying hello. So, guys, Mary is the unofficial captain of the official captain of the like button. Unofficial just flows off so much easier, but Mary is the official captain of the like button. That means, guys, hit that like button, turn it blue. I'm gonna have some coffee while you guys are doing that. I'm gonna enjoy a little bit of coffee here. And Paul's saying, good thing I have no USA dividend stocks. Yeah, Paul is uniquely immune to this for sure. He's got, what do you got there, Paul? You got strategy, you got Tesla. So Paul is playing a game that's a non-dividend game, so Paul is fine. You gotta love it. Bismarcky says, I think Donald's day is coming. His uneducated supporters are going to turn on him real soon. That, I hope you're right. I think, as amusing as he is, it's real people. It's real people that he's messing around with. So, yeah. You know what, Donald? Go away. I'm pretty sure, from the amount of negative stuff I've said about Donald Trump, I'm pretty sure I can't enter the U.S. right now, and not without getting detained for a while. So, and I'm okay with that. Donald, I'm a threat to you because I don't like you. There we go. I said it. I'm okay with it. Now, mind you, if the U.S. takes over Canada, if he ever sent the military in, I could be screwed, but I'm okay with that too. Paul says, will this affect Canadian companies owning USA stocks and doing covered calls, then later paying a dividend Canadians? Yes, it will. Yes, it will. Um, that's the thing. This could impact a little bit of everything. Now, initially, 5% is not that much. So you might see, let's look at HYLD. So they got, what is it, a 14.8 cent dividend? Maybe that'll pull back a little bit. Maybe that'll pull back to 14 cents. We are going to see some impact, provided the government doesn't do what A. Baldwin wants, getting rid of that DST. Yeah, go away, DST, go away. But I would rather the Senate kill the bill, and then maybe the liberals realize the DST is not a great thing. But I don't know. Right now, the only thing I'm kind of happy with is at least I know that apparently Carney gave one of his ministers, what was it, 90 days or something, to get rid of a bunch of red tape. So, or it might have been 30 days. I can't remember the exact date number. I didn't, it's not a story I covered. I sort of caught it as I was flipping through YouTube yesterday briefly. So yeah, what can I say? Paul says, would be cool if the AI generated pics like the Trump one was Trump in a GIF, as in a GIF dancing. Probably. Yeah, now mind you, now with this image, Trump is GIA. So yeah, Trump is a GIF or GIF. Sorry, Trump is AI, but the background is just a regular image off of Canva. And then I wanted Trump doing his little YMCA little dance thing. So I wanted to put that in there. And then of course I have to do the transparencies and stuff to get that effect where he's coming up beyond the picture. All right. Rory says the Senate is our only hope. Help us, U.S. Senate. You're our only hope. Oh boy. We actually watched Rogue One because we finished watching all of the Andor, so we thought it would be fun to rewatch Rogue One after that. So Princess Leia was in my head. So what can I say? Seabass says, every day I wake up is like I traveled to an alternative timeline. Things are crazy. I know. That's the thing. Things are absolutely nuts. Oh boy. Well, what can I say? Now, I will say that Trump is not our only story. I just wanted to get him out of the way first, because we do have other stories. And let's actually jump into one of them. Why not? Let's push on with the news. All right. So our inflation data came out. So CPI, and well, we came in year over year. We came in at 1.7%. That's exactly what we were forecasting, by the way, 1.7%. So we did meet expectations. Now, previously, the previous month, we were at 2.3%. Now, before you get too excited, that number, well, it's pretty much because of the removal of the carbon tax. So the carbon tax, of course, was a big driving force in inflation. Now that it has been put on hold, I think it's still technically there. It's just set at 0%. So that's what brought us down. Month over month, that actually led to inflation coming in at negative 0.1. I like negatives, although on the month over month, we did forecast negative 0.2. So we came in a little light there, just a little light there. But what can I say? We also had the PPI, so the Producers Price Index, that came in at 2%. And that's actually not bad because we were forecasting 2.7%. So wholesale inflation, basically, that's your Producers Price Index, is what we would call wholesale inflation. That was very positive. I like it. Now, one problem that we do have, though, is even with inflation being relatively low, groceries still found a way to outpace it. So groceries are still saying, We don't care if inflation is low. We're taking the hot air balloon up. Yeah. So food prices for food that was purchased from stores increased on average 3.8% year over year in April. That is up. That's up from March. March, it was 3.2%. So food inflation got a little bit worse. This is actually the third straight month that food inflation has been going up. Now, what the heck is going on? Fresh veggies. These are some of the three big categories. Fresh veggies were up 3.7%. Coffee and tea up 13.4%. And get ready for this. Holy banana bread. Beef up a whopping 16.2%. Now, a lot of what we're seeing in some of these prices, this is tariff related. There is some tariff relation in there. So, for example, with coffee, even though coffee is growing in places like Colombia, or if it's a lower end coffee, probably Vietnam, a lot of it ends up going to the U.S. first, and then when it comes into Canada, there's tariffs involved. So the tariffs are hitting us a little bit on that sector. I not a big fan of that. As you guys know, I like my coffee. I like my coffee big time. So what can I say? What can I say? Oh, well. Rory says Eric Natal with 9 point is finally bearish on oil and bullish on natural gas. We'll see if he's right. Oh boy, yeah. We're gonna have to. It's going to be interesting. I think everything is going to be very, very interesting. Now, as we know, there was still that rumor floating around that Israel's planning an attack on nuclear facilities in Iran. I have not heard anything else about it, so I'm you know how I said take it with a grain of salt last time I brought it up? I'm going to say take it with a couple of grains of salt at this point. But there's always that potential for some chaos in the Middle East for sure. Industrial carbon tax is still there. Yes, it is. David says, yes, Paul, it's still here and it will go up to compensate for the consumer tax that was removed. And David further says, I shouldn't be here in this safe space for the lefties. I would like to think that we have a safe space for both left, right, central. I don't care where you sit on the spectrum. I'll report on everything. It's kind of like if you've seen those commercials for like ground news, I like to say that I sort of sit in the middle a bit. I'll cover right. I'll cover the right. I'll cover the left. I'll cover the middle. Politically, and I don't try not to get too much into my own personal politics, but I am right of center. I am right of center. I'm what you would call a small C conservative, but that's where I sit. Absolutely. Paul says house prices never went up, dollar went down, and wages never went up. Oh boy. Hashir said, I paid $7.95 for an iced coffee today. Oh my God. That's a lot. That is a lot to pay for coffee. Now, mind you, I will tell you, I don't know how much it would cost to go out and get a cup of coffee right now. That's how long it's been since I've done that. I make my own coffee. I know the price though of coffee. I used to be able to now, and you guys know I like instant coffee. I'm weird. I admit it. But I used to be able to get a thing of Maxwell House for like $4.97 regularly. Now I'm lucky if I can get it for under $8. So yeah, it's almost doubled in price. It's crazy. All right. Let's see. Paul says $100 of Bitcoin in 2020 is now 1,201, but $100, well, a fiat $100 is now worth $76. Let that sink in for a moment. Yeah, that's true. That is true. Yeah, absolutely. And of course, Bitcoin this week, Bitcoin hit a new all-time high up there at I think it almost made it to 112. So it's kind of interesting. Now we had a pattern happening towards the end of the week. I was hoping it was going to bust up. If it busted up, we could have been up. We could have even made it up to like 115, but it went down a little bit. It went down a little bit. We'll have to see how. We'll have to see how this week goes. We'll have to see how this week's go. I still am adamant that I think we're going to get to 120. And I hope I'm wrong. I hope we go higher. I hope we completely obliterate where I think the top is this time around, and we could be. I'm absolutely. We're in a lot of times people say, well, it's different this time. This is one of the few times you can say it's different this time. And yeah, it is. We've never seen the craziness that we've been seeing ever. It's just crazy. It's absolutely crazy. So yeah, it is different this time. I think that's going to make it really hard for people to make good predictions. So what can I say? A bill is in the house. And let's see, my 1 cent of USD NVIDIA dividend works out to zero point 0.7 Canadian before withholding, 0.6 after the current withholding, and 0.0035 after the new withholding. This is before income tax. That's not too shabby, Bill. That's not too shabby. This is one of those things. Like I always say, if I'm holding something, a U.S. stock that has a tiny dividend, I'm really not concerned. I'm not concerned. But if I was holding something like, let's say I was playing some of the yield max ETFs, so some of those synthetic covered calls, I'd be concerned about those dividends. Absolutely. Marco says Canadian economy is in free fall. Yeah, we're heading to a recession. We are heading to a recession, probably before the end of this year. So, yeah, it's a fall. That's definitely. I don't know. I wouldn't call it a free fall, but I think we're definitely sliding. We're sliding into a recession pretty fast. Rory says No Frills had Maxwell House at $6.50 locally. It was $7.49 for 500 grams. Ooh, $6.50. That's not too shabby. Not too shabby. Yeah, it's like I kind of look at two things. It's actually funny. I remember back in the day, before 2020, I used to every so often Shoppers Drug Mart would they would have a Maxwell House sale. They'd put up an end, put a bunch of Maxwell House containers, and they used to have it for like quite literally about $3 a bottle. And whenever I get in there, I came into Shoppers and I saw $3, because back then they were basically $5 at that point. I used to buy about 20. Sometimes it would be like a limit, like 2 per customer. So I would just buy 2, go back, do it again, and then come back. I used to buy like a lot of them while that sale was on. Michael says, let's see. Bernstein analysts reaffirmed their market perform rating and $30 price target for Pfizer on May 20th, following the company's recently disclosed $6 billion licensing deal with 3S Bio. Yeah, that's a good deal. I have been long term. I'm good on Pfizer. I think that I think they're going to do well. I still think that there's going to be a little bit of pain left while the craziness that is the United States is happening. But we're going to have to see. We're going to have to see how this is all going to go. David says, when the tax kicks in, sell. There we go. And some people will. Some people will absolutely sell. We're going to take a look and see where this is all going. The government has not, and I'm disappointed. I am disappointed. I wanted some kind of a response. Yeah, this happened Friday, but we should have heard something. We haven't yet. Oh boy. I'm hoping early this week we get some kind of response. Let us know what's going to happen here. Team Liberal or government. Yeah, let us know. I want to hear something. Paul says Bitcoin is mostly institutional versus retail now. Yeah, no, there's so much money is poured into Bitcoin. Um, well, since the spot Bitcoin ETFs, and you know, we were excited for those. I remember even years ago, I talked about them quite a bit. Like, wait till this happens. Wait till this happens. Well, it's happened, and I think it's a good thing for Bitcoin. Like I talk about the high. I talk about this 120 high before we go into a crypto winter. Here's the thing. There's so much institutional in Bitcoin right now that we're not going to see we'll see a winter, but we won't see anything like we used to see. Um, Bitcoin will go down, but we're not going to go back down to 20,000. I I don't even think we'll break below 50,000, to be honest. So it's going to be very interesting. I kind of need a couple of winters now with institutional and to get a feel for how winters are going to start looking. But I'm okay with it, and quite literally this time. And I think a lot of people have learned from the last winter. A lot of the newer investors that came on around the beginning of the pandemic, they never kind of got that idea that Bitcoin's going to completely recover from that winter. So when Bitcoin fell from 60,000 in what was it, November of 2021, a lot of people took some serious losses. But the smart money who've been playing Bitcoin for a while, they were buying at that bottom. They were buying $20,000 Bitcoin. And those $20,000 Bitcoins they were buying, well, they're now worth $111,000. So, but I think this time, when we do go into a winter, wherever we bottom out, I think there'll be a lot more people buying. And that could help us get out of crypto winter a little bit faster. So something to think about. Let's see, by covered call ETFs. Yeah, keep in mind, when you're looking at a covered call ETF, right? So that return you're getting, some of it is coming from the dividends. And those dividends, if that covered call ETF is holding US stocks, those will be the ones that will be impacted. But, and this is the good news, a lot of that payment that you're getting. So with HYLD, a lot of the payment you're getting is from the covered calls on those funds. So they're from the premiums, the actual options that are written. So that part of the income shouldn't be impacted. It's just going to be that little bit. So, let's say if all of a sudden they lose 5% of their dividends, that doesn't mean you're going to lose 5% of your dividend, of the payment that you get out. You'll lose less than that. Because, like I said, most of that money is coming from the premiums that they're selling, that they're getting when they sell the options on that. So that's something to keep in mind with covered calls. Michael says, NVIDIA always sell off since the split that CEO said Trump tariff going to hurt earnings bad. It'll be interesting. Right now, Apple's really concerned because Trump, he has, and this is actually in one of our stories coming up, but there are some tariffs that Trump has threatened against Apple. And we'll talk about that here in a moment. All right. And David says the DST was to protect Canadian fake media. The DST, like the fact I go on Facebook now, and that's not the DST, but that's that other stupid bill that Trudeau passed. The fact that I can't view news on Facebook, it's annoying. It absolutely annoys me. So it's just one of those things to keep in mind. 51st state. I don't think that's. Even if Canada wanted to be the 51st state, that's something that would be it would be difficult to pull off. It would actually be fairly difficult because it's not a matter of Trump saying, yeah, be our 51st state, and Carney or the Canadian people saying, sure, why not? Well, you'd have to get all the provinces to sign off, and a whole bunch of states. I think it's, I don't know if it's like a majority or 85% or if all of them have to sign off on it. But yeah, it's not an easy process. Actually, to be honest, it would be easier for them to take us militarily than to have a peaceful annexation. Paul says, lucky I have a part-time job. It would be hard to get a job now. I have a 5-week gradual return to work overlap with EI sick benefit ending June 15th. Yeah, nice. Yeah, we are looking at, and when we get our next job numbers, it'll be interesting to see. I have a feeling we'll see unemployment at least tick up one more point, but we are expecting we're expecting layoffs. That's what happens when you go into a recession. It's not going to be it's not going to be good. I'm not going to, there's no way for me to even spin it as positive. It's not going to be good. David says, I want to see the Liberals out of power after 10 years of Justin Trudeau. This country is, and we all know what that word is. We all know what that word is. Yeah, here's the thing. For one, all right, we're not going to see an election soon, even just for the simple reason that most of the parties right now, they just spent a whole bunch of money on the last election. So parties need to fill up their coffers before they're even ready for an election. So before you even see some of the parties in the background sort of, trying to work out, can we all get together and just vote them out? It's gonna take a bit. It's gonna take a bit for that. Now I guess the big problem, and this is where the NDP. So the NDP is absolutely broke. They've got no money. They're going to be a stickler, even if all of the other parties, if the Bloc, the Conservatives, I won't even count the Green, but if the Bloc and the Conservatives wanted to vote in non-confidence to get the NDP on board, it's going to be hard. I think they will back this government for a bit. But with that being said, they did lose a seat. By the way, the Conservatives took one seat from them on one of the recounts. So the Conservatives went up a seat and the Liberals went down a seat. So you're one seat closer, David. You're one seat closer. Rory says, if we become the 51st, I'm not too proud of that 37 trillion debt we'd be trapped with. Understandable. Liberals will open refineries. Yeah, that's the thing. That's what needs to happen. At this point, it's hard to say. I need to see this throne speech. That's going to be really important to see where they're planning to go. I think they will move forward, or at least make movements to move forward with the pipeline. But here's the thing. The Liberals, this is what they need to do. They need to they need to step back. They need to step back from a lot of the, a lot of their ultra climate kind of, views. They got to step back. There's nothing wrong with keeping the climate in mind. You know what? You can do it less damaging to the climate, but you got to move in that direction. We got to get this pipeline. That would be one gift. So Alberta has been ignored a lot by the government, in the last 10 years. Don't think anybody will disagree that Trudeau pretty much ignored Alberta. So understandably, Alberta's mad. They should be mad. So this government, Carney needs to, and hopefully because he's from Edmonton, even though, he was born in the Northwest Territories, but he was raised in Edmonton. He should have an understanding, and they need to start throwing a few things to Alberta. They do, absolutely. If they don't, then once the other parties are ready, maybe that vote of non-confidence will come. But for now, Liberals, you gotta move a little more to the right. I'm afraid you gotta do it. All right. Bismarcky says, if we become the 51st state, I'll move to. Oh, there we go. Is that? I'm not familiar with that flag. I think for some reason Puerto Rico pops up into my head. I don't know if that's what I was thinking, but why not? David, we have 1/10 of the population and about 1/10 of the debt. Yep. A says, no love for Nescafe, only Maxwell people here. Oh my God. I don't know what it is with Nescafe. Like, I have tried Nescafe, and no, I just don't like it. It's really just not that good. Now, mind you, I believe Nescafe makes Taster's Choice, and that brand is not so bad. But regular Nescafe, I don't know, there's just something off with that taste. Davis says not much difference, and I'm moving to Cuba as well. Is that what that was? Cuba? There we go. Yeah, like, I don't know why. Yeah, Puerto Rico is what, a territory. So, Rory says nabob. Okay. Let's see. Paul says have worked 2 by 4 hours, then 2 by 4 hours, then this coming week 4 by 4 hours. EI sick benefit equals regular EI minus what you worked, 50% of what you worked. That's not too bad. That's not too bad. And David wants a third Trump term. Trump has actually recently said he's not actually thinking, he's not actually planning a third term anymore. But, there would definitely need to be some changes, though, to have that happen. Let's see. Do you know, like BTCI ETF, it pays 2% per month in synthetic dividends. It should double capital on every 3 years, even if the ETF price remains unchanged. Greetings from Brazil. Well, hello, Brazil. Good to see you. Yeah, I do. I actually need to make there's been a whole bunch of new crypto ETFs. I need to make a few dividends. A few dividends. I need to make I need to make a video. I need to make a video on these. And yeah, there are a couple new ones. There is that one. There is some of the Solana ones as well. So look for that soonish. Probably, well, it'll definitely be June. Not the first week of June. The first week of June is pretty much already claimed because, as you guys know, we got bank earnings this week. So that means first video of June is going to be my my Q2 bank review video. And then we got the 0 to 100K following that. So that week's going to be pretty busy, but perhaps the week after that. Because I definitely want to get that in. I almost made it for this time around, but there was a topic for Tuesday's video. So Tuesday, we're looking at undervalued stocks. So basically stocks with a low PE and a proven track record of success. Well, I'm looking at both of those. So there's some fantastic companies in this list. So anyway, A says, I used to remember Maxwell being around $4 per bottle and $5 for Nescafe. Now Nescafe, you could be lucky to find it for $6 and mostly at $7.49 at no frills. Yeah, there we go. Let's see. Mark Carney is threatening a needle and slightly stealing conservative platform. Well, that's one way to, here's the thing. That was one thing that you got to give Mark Carney credit for. He pretty much came in, stole a bunch of stuff off of the conservative platform. And that did throw it. I don't want to say it through Polyev. I don't want to say what through Pierre too far off of his thing, because you got to look at the numbers that Pierre pulled in were very impressive. It's just that the Liberals pulled in a lot more. Like, we've never had an election. Like, if you look at the number, the amount of votes that the Conservatives had, any other election year than this one, you would have had a Conservative majority with that number of votes. So you got to give him a lot of credit. You absolutely do. Marco says, let's see, mountain layoffs are here. I'm a leader of a trade union. What is happening right now has not happened since the late 80s, early 90s. Yeah, no, the layoffs, unemployment's going to go high, guys. Right now, if you have a job, I would make yourself indispensable. It may be too late, but maybe not. But that's one of those things, because a lot of times when layoffs happen, if you're that one employee who, does everything, who is absolutely the glue, you may not get laid off, but you still might. But I would be prepared. I would be prepared. Nobody, I think, is safe. Nobody is safe, unfortunately. A says, I don't see any fruits for $2 or less anymore, unless it's apples in the season or a staple like bananas. Yes. When I was a kid, and I've mentioned this before, but we had the Great Banana War. So back this was Nova Scotia. For whatever reason, one of the stores, and this is in the 70s, guys, so quite a ways back, one of the stores decided to sell bananas for, basically, you could buy a bunch of bananas for a penny. And when that happened, I think it was either an IGA or a Sobeys that started it. Every other grocery chain in Nova Scotia, they all kept lowering their banana prices until it was just, like I said, it got to the point where it was a penny. So bananas were so cheap that it was like, I mean, it was pretty much like my mom was giving us like multiple bananas to take with us in our lunches for school. There was banana bread everywhere. It was like, what was the banana war? So it was pretty crazy. I don't think I'll ever see a 1 penny banana anymore, but I'll tell you, I miss the banana war. Rory says Saskatchewan is mad too. Oh yeah, absolutely. That's the thing. Yeah, Calgary kind of takes center stage when we think about the West, but you can't forget about Saskatchewan. There's a lot of people. I even imagine there's probably a little bit of anger in Manitoba too. So it's kind of that thing. Canada does not stop at the Ontario-Manitoba border. We got the rest of it too. Paul says, with our winter weather, EVs are not practical. I'm in BC Lower Mainland, have a Primus Prime plug-in hybrid. Range in the spring, summer, 42K in EV mode versus winter goes down to 36. Yikes. Yeah, what can we do? Let's see, Bismarcky. Ontario gave McDavid and Gretzky to Alberta. There we go. Let's see. Paul says, no thanks to third Trump term. Rumors saying Trump can run again as VP, then later, if they win, they switch. And there's a lot of different rumors, a lot of different ways that I suppose it could happen, but he'll be way too old. Like he knows he's not going to run. There we go. See, Rory saying the same thing. A says, what do you think of BCE after the dividend cut? Are they fully recovering the payout ratio now with earnings? They're getting close. They are getting close. So yeah, that cut, it was needed. Now, one of the things I thought was surprising about BCE is that normally a dividend cut, people start bailing. People start running for the doors, but not this time. Not this time. I think everybody kind of expected the cut. I don't think anybody was surprised by the cut. So yeah, I think BCE will be fine eventually, but they still may have a bit of a struggle ahead of them, but that cut's the step. It is a step in the right direction. He's got a lot of energy for an old guy. Yeah, absolutely. He's definitely got a lot more energy than Biden did. Rory, yes, he does. Dodging all those pew-pews. Threading a needle above. Oh, boy. The government said inflation was down. Does anyone believe what they say? Yeah, it's not so much that it's not that inflation is down. It's because the carbon tax, because they dialed that back to zero. We got a little bit of a number skew on that. So something just to keep in mind. Let's see. Paul says, actually, if the NDP did better, conservatives would have done better. Yes, absolutely. Absolutely. A lot of NDP voters were kind of in that mode where it was, they weren't voting for who they wanted. They were voting to stop Pierre. So, the Liberals definitely picked up votes because of that. No doubt about it. No doubt about it. Which USA company earnings have you have you liked in the last month? Good question. Nothing's coming to mind per se, but yeah, I can't think of any in the last month. Normally, I'm looking forward. Let me say this. I'm looking forward to the next round of tech earnings. I want to see, because Google has announced a lot of AI improvements that people have been absolutely very happy about. So I want to see how that's going to translate into their next earnings. So I'm kind of excited about the next Alphabet earnings call. Paul says, if I was buying non-strategy Tesla, it would be Costco. There we go. Let's see. Pfizer having so many drugs approved with more people taking medications that Pfizer paying 43 dividend that Pfizer should go back to $30. Interesting. Mr. H93 says, we need Trump in Canada. So sad we can't be the 51st state. All right. Paul says, sad, but when you get above 80, things go downhill. What are your thoughts on the banks at the moment? All right. Well, luckily, not this week, but the following week, we're going to get my Q2 bank review. So for the big six, you'll get a much better answer in that video than what I'm going to give you right now, only because all have had a chance to see what their new their new their new earnings are going to look like. So right now, I still see a lot of resilience in our market. So in our banking and our financial market, yeah, you know what? There are some problems. We got a couple of big things happening. One, the worst of the mortgage renewal wave. So all of those very cheap mortgages that were taken in the pandemic, the worst of them are hitting this year and next year. So we've got loan loss provisions as a big theme that's going on, and they've done well so far. So far, they have gauged everything right on the money. I like that. I like that a lot. But now you've got two things. You have, of course, that mortgage wave I talked about. You have collateral damage coming as well from tariffs. So, for example, if a business is forced to shut down or lay off people, those people may not be able to make those mortgages. They may not be able to pay their credit cards. They may not, there may be defaults like that as well. Now, the banks have been putting money aside. Now, keep in mind, that could impact earnings this time because they're putting extra money away for tariffs. That means that's money coming out of that cash flow. So, we could have some interesting earnings, but I think for the most part, the banks have been pretty resilient, and I think they've been playing the game pretty good. So I'm liking it. All right. Will BCE and TELUS ever merge together? They already share cell coverage. I will say no. And I'll not even if they wanted to, I think the government would never let that happen. It's bad enough that we've only got the big three right now. To go from a big three to a big two, oh yeah, I don't think that would be good. Uh-oh. Yeah, Dallas has scored. So we got about 3 minutes left in the second period, and it's 2-1. All right, come on, Skinner. I think that's his name. Don't let any more in. I love gold. Gold, absolutely. Let's see, Mr. H93. The Canadian voting system has to change. It's rigged for leftists to stay in power. So sad. We definitely need some voting reform. Like proportional representation. That is something, and it's actually interesting. The Liberals back in the Trudeau days had campaigned on that, but then never came through with it. So yeah, absolutely. There definitely needs to be there needs to be some adjustments to the way we vote. No doubt about it. Paul says, we have not reduced our Costco spending. All right. So you're still spending the same amount at Costco. Let's see. We only have one right party, but the left has 4 parties. And that's interesting, though. Back in the day, if you remember, when we had the old Conservative Party and the Reform Party, they kind of recognized that was splitting the right, and that was making it very hard for, the Harper years wouldn't have happened if they had not merged and formed, solidified the right. Now you could say it's kind of scary. What if the NDP were to merge with the Liberals and solidify the left? That could be very interesting, but I don't think it'll happen. I really don't think it will happen. And honestly, here's the thing: we were due. This election should have been blue. I mean, it should have went to the Conservatives. There's no ands ifs about it. It's just, a weird situation happen because we normally, after we have a run, we normally switch back and forth between the parties. We have the liberals for however many years and the conservatives for however many years. It was their term, but a whole bunch of stuff happened, and now, you know, it's still their turn next. It's still their turn next. Unless like in this current iteration of government, unless Carney does some amazing stuff, I don't think the liberals can win the next election unless, like I said, like if he keeps his promises, if he builds that pipeline, if he opens up those critical elements, if we get the refineries, oh boy, well, maybe he'll have a chance. But um, you know, I wouldn't place a bet on it. I wouldn't place a bet on it. A says, will Trump tax cut bill further crush the healthcare ETFs? And that's I I just don't see a lot of good in health and the healthcare companies right now in the US because of everything that's going on. So I it's an area that I don't think I would personally get into. I would kind of shy away from it because yeah, I mean, you're looking at some of the cuts, a lot of people getting removed from Medicaid because of it. I mean, yeah, that technically you could say that, those sick people still have to get health care, but some of them are not going to. Some of them simply can't afford to. So, yeah, it's hard to say. Why not turn the big six to you or to the magnificent seven? Um, yeah, so all right, thinking of the banks, we got the big six. I guess magnificent seven, you could count. Are you thinking EQ? Are you thinking like EQ Bank perhaps is number seven? Um, you never know. You never know. I mean, I love EQ Bank. I'd love to see them get bigger. Paul says 5-year fixed mortgage rates in March of 2026. Oh, and by the way, King Deuce, just going back to this. So when I do my big six review, I also do touch on, I touch a little bit. I at least pull in some data from like EQ Bank and Laurentian. I used to have Canadian Western Bank, but they're now part of National Bank. All right, Marco says Canada and the US should form a union, same as the EU, but with some tweaks. I believe that is Trump and Carney's final solution. Pin this comment. I won't pin the comment, but I agree. I think an economic union is fine. And that's the thing. I mean, if Trump would have opened with that, it's like, we would like to form an economic union with Canada. Canadians, I think, could get on board that. I think we could. So that may have been the approach. And I know, I believe, I think O'Leary was talking about this as well and saying that's what Trump's end game is. You know what? I think that would have been a much better opening. Then we could have had a better discussion. Free fall by design. Justin did all he could to kill Canada. Oh boy, yeah. I'm glad Justin is no longer in the seat. All right, let's see. We are witnessing the USD crash now and lose reserve status, or will it plateau down after a certain degree of fall with tariffs? It's going to be interesting. So, we've already seen the US lose. They've already lost a little bit of their credit rating, going from AAA down to what is it, AA plus or something. Will we see that? It's hard to say. Like Trump has threatened if anybody removes the US dollar as the reserve currency, that he was going to hit them with massive tariffs. Not like it's much different from now. It'll be fun to watch. I think it's going to be, I honestly think it will be fine on the other side. Maybe a little more shaky, but I still think it will be, I think it will be fine. And I think it will be fine for now. But oh boy, it could be interesting. The Golden Dome Defense Shield, yes. And Canada apparently has signed on for that. So I think that's going to cost a lot more than Trump thinks it's going to cost. So what can I say? And oh boy, here's some happy news. Connor McDavid scored. We're up to 3-1. 3-1. And we're in the, Wait a minute here. Are you sure he scored? Oh yeah, yeah. I had to refresh the page. Normally it auto refreshes. I'm on like the score thing on the NHL site. So it did. Guy is in the house with a hello, Candace, and the group. Good to see you, Guy. Good to see you. All right, we did have another report drop, by the way. Retail sales. Our retail sales report dropped, and well, for March, we came in at 0.8%, a little bit more, a little better than we forecast. We actually forecasted 0.7%. Now, last month, of course, we were down 0.5%. We also got the preliminary data for April. So with April, it looks like it's going to come in at 0.5%, which is actually still better than the forecast negative 1%. So those retail sales, as I mentioned, the 0.8%, that does translate to about $69.8 billion. There was also some volume increase. So the volume sales rose by 0.9%. So that basically just tells us that we got some real consumption gains. Auto sales, that's what drove all of this. People are getting them cars before the tariffs. They're getting the cars before all of the auto tariffs started hitting. So sales at motor vehicle and part dealers, those jumped by 4.8%. New car sales. Yeah, new car sales rose 5.2%. Used cars was up 2%. Yeah, many Canadians getting those cars before the tariffs hit. no ands, ifs, or buts about it. Pretty much everything within non-auto retail also grew a little bit. So 5 of 7 non-auto categories posted gains. So, and once again, a lot of it is people just stockpiling some of their non-discretionary goods ahead of some of the broader tariffs. So some big increases were building materials, garden supplies. Those are up 2.6%. Clothing and accessories up another 2.6%. Now, if we get rid of gas and we get rid of auto, that puts us into our core retail sales. They were still up. They were up 0.2% in March. And as I said, April, we are looking to still be in the positive, but as we trudge along, this is always not good if that trade war drags on. Now, our GDP report for Q1, that is due to come out at the end of the month. And of course, the next rate decision by the Bank of Canada, that's coming up pretty soon too, June 4th. June 4th. What can I say? All right, I'm just going to get one more story out of the way. Just our our trade war front lines. Not a lot, but we had a couple of things. So Friday, yes, Trump threatened new tariffs, a 50% tariff on Europe. He said that they would start June 1st. And he also threatened a 25% tariff on iPhones if they are not made in America. So Apple, not very happy about that. Apparently, the screws they use in the iPhones, you can't even get them in America. And the worst thing is because of all of the tariffs against China, Apple had already begun the resetting up of their iPhone production in India. So they already made that move. Oh boy. So Apple is not happy, and I don't like it either. I like Apple. I like Apple. So I would like to see things to be a little bit better. Now, one thing on a more positive note, Trump did come out and said that he wants to begin to streamline the whole regulatory process on new reactor approvals. And that, of course, caused a few uranium stocks to pump. So, if you like your Cameco, that one wasn't bad at all. Not bad at all. I was okay with that for sure. All right. Oh boy. Let's see. Do you feel fixed or variable is the better option right now? It's a good question. It's a really good question. I still think we're going to go down a little bit. I can see before the end of the year another 50 basis points off of our rate. Now, yes, we will have, of course, inflation that is induced by tariffs, but the Bank of Canada kind of knows we got kind of a double-edged sword. The other edge of that sword is that economy. Our economy is going to be just tanking, and as unemployment soars, the Bank of Canada, I think stimulating the economy is going to be more important than taking care of inflation. So yeah. So right now, if I was going to sign, the problem with variable, here's the problem. Where is it going to go on the other side of this? And that's the thing. If I was going to go with a variable, I would go with a short term. I would go for as short as possible. So if I had to sign right now and I had no choice, yeah, I would probably go with, I would take on a very short variable and then, look to get into probably a fixed on the other side of that. But that's kind of where I think I would go. All right, Guy says, do you think it would be a good idea to do a covered call video, HYLD, HSIS, bank, etc.? I'm liking those yields. Yeah, absolutely. Well, actually I did a deep dive on bank, quite literally last month. So there is that, but yeah, we're probably going to look at some of these videos. Like the next video coming out on Tuesday, we're actually looking at undervalued stocks, and I got some good ones. All right, Marco says, oops, sorry, didn't realize your name was Candace. I'm new here, hoping my boys build passive income futures. You have a great channel. Thank you for sharing your knowledge. Thank you, Marco. Always appreciate it. Absolutely. Brian says, good afternoon, everyone. And Rory says, I put one of my GICs to redeemable just in case I need it. Fair enough. Yeah. I mean, if we move into a recession, and it looks like that's going to be the case, we're probably going to get some deals. We're probably going to get some good deals along the way. And keep in mind, even right now, yeah, the TSX, hit some all-time highs, but, it feels like things are ready to to retrace. So we're not even close to a recession yet, recession. We're getting close to a recession. We're not even close to a bear market yet, but it will happen. It will absolutely happen. I have no doubt. Paul says, going to be a little shock finishing a 5-year fix, 2.05 in 2026 end of March. In 2021, I broke a 2.59% mortgage that was due August 2022. Penalty was $6,300. 5-year rate in August 2022 was 6%. Yikes. Yeah, I hear you. 75% equity versus 25% is mortgage. Brian says, my daughter just turned 39 and is just starting to invest. I spent 7 hours yesterday teaching her the basics of stocks. Do you have any videos for starting investors of her age? I'm thinking ETFs. There are videos out there. I have quite literally, like, let me take a look. I'm kind of curious now. I'm kind of curious. I forget the number. Yeah, there's there's 400 videos on the channel. There's definitely ones geared for new people. And the other thing too is one of the things I do is I do offer coaching. If that's something you're interested in, just email me, admin@mountainfinance.ca. So that could be an option, or just request a video. Like right now on the community tab, we're voting. We're not voting yet, but I'm getting suggestions for the members' choice video. So throw something in there towards new people. I'll put that in. I'll put it in, and then maybe the members will vote it through. But yeah. So anyway, there is a lot. Like there's quite literally a lot of really good. I think there's even one playlist for beginners. So just something to keep in mind. All right, let's see here. Brian says she worries about losing money. She has a little invested with Wealthsimple managed funds, but yikes, over 50% bonds, too safe. Okay, yeah. Yeah, and this is the thing. I will say right now, if you're an investor, you're gonna lose money. But because of the way the market moves, right? You got bull markets, you got bear markets. Here's the thing. If you're new and you do lose money, it's not, you haven't actually lost it unless you realize that loss. So when the market retraces, a lot of times new investors, and probably this is the type of thing that will happen with your daughter, they'll be like, "Oh dear God, I'm gonna lose everything. I better sell before it gets too hard." And that's what they do. They sell. They will sell at the bottom, and then the market turns around and goes right back up. And then they're like, "No, you left me behind in a hole." That's what happens. It's not good. It's not good. Um, that's why kind of understanding that yes, you will lose money, but not really if you don't sell. If you've got, if she's investing in good fundamental companies. So, for example, let's say she's invested in, I don't know, Royal Bank. Well, yeah, you know what? Royal Bank goes down, it goes up. But over time, it goes up higher and higher. And that's kind of the part of investing. If you were to sell every time it goes down, and then when it starts going back up, and you're like, oh, it's moving back up again, I'll buy back in. You're losing money by doing it that way because then you're not, the whole idea is that, you've heard the whole thing, buy low, sell high. Well, when you give into fear, you end up doing the exact opposite. You end up selling when it's low and buying when it's high, and that's a subscription for losing money. So anyway, just little pieces like that. And always feel free if you got, like, you could quite literally come in here with a question that you want answered for her and ask it. And I don't know if you guys can like clip things. I don't know if you guys can clip things from these live streams or not, but you can always just take a note at the time that the answer is, and then say, okay, watch this here from here to here. There's your answer. So yeah, feel free. Agi says, great job, Brian. I'm doing the same. And Rory saying Mountain Finance, Beavis Investing, and Dan from Stock Trades have good videos. I like all three of us. I mean, it sounds weird to say I like myself, but I do. Why not? RANB says, do you know if there are any ETF on video games? That's actually, I thought, let me take a look here. And see. I need to, whoops, give me a second here. I just need to, there we go. I need to pull this up. I thought there was one called, ironically enough, I thought it was called Game. Oh no, here it is, Hero, the Evolve e-gaming index right here. I knew it was something like that, but yeah, Hero. So this one here, so right here, basically, so this one here replicates the Selective e-gaming index. So the e-gaming index, it's not like a covered call or anything. It's basically a growth, but yeah. And let me just pull this up here. Let's just look at the 3-year. E-gaming doing pretty good, RANB. So yeah, Hero, Hero. There we go. I had to think for a second. I knew it was out there though. All right. Yes, I'm sending her Canadian links. Okay. A-okay. Brian says, I learned a lot of mistakes when I started out. Still holding the bag on a few. I went over all my stocks with her and why I bought them. Why did you buy pot stocks? Oh my gosh. And I'll tell you one other thing here. This is kind of an interesting thing. I'm thinking about doing a different type of a list video. I'm thinking of doing a video where it's going to be, and you guys will let me know if you think this is a great idea. I want to do a video where it's like, it's kind of like lightning round, 50 things, like 50 things I wish I knew when I started investing, something like that, where it'll just be bang, bang. Like I wish I knew what the difference between a TFSA and this, and just bang, bang, just a whole bunch of quick ones. I'm thinking about doing it. It could take a bit to make it. Well, it'll take a bit descriptive, that's for sure, and to come up with 50, but I am thinking about it. Brian says, I told her banks are safe. If they go bust, you don't need to worry. We're all screwed. Fair enough. Let's see. Rory says, yeah, if Royal TD, CIBC all go to zero, we'll be hiding in caves. Yeah, there's that. All right. Mark is in the house. Hello, Mark. Let's see. Hi, Candace. I sold stuff in my TFSA at a loss, but bought other ETFs at a discount. So tit for tat, I guess. Now back to the Oilers game. Yeah, absolutely. And that's one of those things. Like when I say that you probably shouldn't sell things at a loss, sometimes if you're in a stock or an ETF, it's at a loss and things just aren't looking good. But there's another ETF that's having a correction, but things look a lot better for it. Sometimes making a sideways movement is not a bad thing. Take that loss, move it over to the other one that's going to recover better than the one that you were lost in. Because I have seen people who are in that mentality, like, I'll never take a loss. And they sit in that struggling stock. And by the time they recover, all of the other stocks they could have gotten into, that they could have just moved, did a sideways move, are way, like they're like halfway to the moon. And this thing is still trying to build a launch pad. So yeah, it can make sense. I mean, you got to do your due diligence. You want to make sure that it makes sense when you do take that loss and move it over to another asset. But yeah, absolutely. It's not a bad thing. Like, so for example, imagine back when Bitcoin was at its low, you could have moved into like a spot ETF here in Canada from anything that was struggling, and you would absolutely have left it in the dust. That's just an example. Not saying that that's what you need to do. Just an example of something that could have happened. Xborg says banks can be good, but I like to keep in mind whether I'm getting a deal or if it's buying into FOMO at a peak. Yes. So FOMO, for those of you who don't know, is the fear of missing out. And that's one of those things when the market is at all-time highs. A lot of times people are like, oh my God, this has been going up and going up. It's going to keep going up. I got to jump in. And that's what happened. Well, back using Bitcoin again as an example. Back in 2021, November, Bitcoin had hit an all-time high in the 60,000s. It came back a bit and then went back up again into the 2000, up around 60 something thousand. A lot of people at that point were the hysteria was up there and everybody was screaming Bitcoin to 100,000, Bitcoin to 100,000. If you guys remember, back in the Crypto Night in Canada days. And the Crypto Night in Canada days, they were well, what were they doing? They had hats that said Bitcoin 100,000. So everybody was in on it, and everybody thought it was going to get there. I was a little skeptical. I mean, I was hoping, and then it crashed. It crashed big time. But a lot of people bought up in the 60,000s, and a lot of those people, because at that point they were coming in on the hype. And when Bitcoin crashed and went, over the next little bit, went all the way back. I mean, at one point it actually wicked all the way down to 18,000. Oh boy, a lot of those people sold, took the losses. Craziness, real craziness. So, yikes. Yeah, what can I say? Paul says if everyone is saying buy pot stocks, then the top has already been reached. And yeah, here's a couple other. A nerd. Espo, Nerd. Let's take a look at Nerd. I don't think I've seen Nerd before, but here we go. Those are the Roundhill. Yeah, there we go. Roundhill video game. I remember. I think I have seen Nerd before, but yeah, Roundhill video games ETF right here. Take a look at them. Yeah, video game ETFs not doing too shabby. There you go. And you also got Espo as well. So not too shabby. And Tanya's saying Grand Theft Auto T2 stock. Yeah. So yeah, like T2. That's the Take Two. So yeah, and there's your Grand Theft Auto. I believe they've got a new game coming out. They're working on it. But that's kind of a good thing. That could be a good thing for that stock. Let's see. Do you think we will be hit harder by recession than the U.S. because of our dependence on them? I feel the EU might do better this recession looking at outflows to EU stocks. I think potentially. I think we could be hit harder initially going into a recession for sure. A lot of it's gonna really depend on this government. If they do what needs to be done, yeah, we're gonna still take some pain. It's not going to stop that, but we could look a lot better on the other side. If they don't do what needs to be done, well, yeah, then that it's not gonna be good. It won't be good. Canada should be, and I've said this many times, Canada should be an economic superpower. We have so we have so many resources. We have so many critical minerals. Our problem is that one, we got red tape out the yin yang, so it's hard. It's hard to get anything done. We don't have very much processing power of our own when it comes to oil, when it comes to minerals. So a lot of the stuff, like you take the oil that we sell to the US, they're getting it at a good discount. If we could process our own oil, oh, we'd make a lot more money. You know, I so anyway, yeah, we need a lot. We need a lot to be done. We need a lot to be done for sure. Harvesting Income says, what will happen to the US Treasury or bonds? And like to know if TLTW ETF iShares US Treasury buy right ETF can be a good option for income. That's one of those things. Traditionally when things go, when the crap hits the fan, bonds tend to do much better, Treasury bonds. But we're at this point where there's so much mistrust, and a lot of countries are starting to strike back at things like not buying bonds, US bonds, that it's not as safe as it normally should be. That's kind of where I'm sitting at. Like, I think we still need more time to see whether they have lost their safety completely or whether we're sort of seeing a bit of a fluctuation. But like when Trump put the pause, recently he put that 90-day pause on tariffs, on the bigger tariffs. The low ones are still there. The reason he did that was because of some of the impact on those Treasury bonds. So we do know that those actually mean something to him. So hopefully that could be a little bit of extra safety, because he'll only go so far. And if they start fluctuating the wrong way, that might cause him to step back again. So we'll have to see how that goes. But traditionally, they have been safe. Paul says, I remember the frenzy when strategy reached 540 last fall, and the poor people that paid 540, when everyone thinks it will go up forever, it could be a top. Yeah, you got to be careful. That's one of the reasons. Like, and I say this often. Dollar cost averaging is always the best way. Now, yeah, we got, I mean, everybody here has you all have different investing styles. We got people in here who are straight up long-term investors. They're just looking for new things to dollar cost average. Fantastic. Those are people who will make a lot of money over time. No doubt about it. But we also have traders in here. You know, we got people like Paul. Paul likes to trade a little bit, moving back and forth between strategy and Tesla, and a couple of his extra little MicroStrategy plays that he has in there. So we do have a little bit of everybody. But yeah, if you're looking at something, if you're dollar cost averaging and you end up getting it at a high, then fine. You know, your next pie might be, halfway down towards a low. Who knows? But what you end up doing is, over time, you end up getting, well, look at this right here, the T2. If you were dollar cost averaging here, yeah, you know what? You're paying more. Oh, you're getting a bit of a deal, paying more, bit of a deal. So that's not bad. It's not a bad way to go. So when all is said and done, your value will look more like a fair line that comes up through the whole thing, because you're getting an average right across the board. So it's not a bad way to go. Not a bad way to go. Now, you got to love nerds for sure. Brian says, I told my daughter at her age she should put some spare change over the years, and when she is older, it should be worth a lot more based on having. Yeah, so Bitcoin. Yeah, absolutely. I mean, Bitcoin, I think it's at this point, like, back at 2000, everyone was still calling it a speculative asset. And some people today still call it a speculative asset, but the number of people calling it a speculative asset now are a lot lower than those that were calling it a speculative asset back then. So, um, yeah, I would agree. I would absolutely agree. All right. Bonds go down too. Yeah, absolutely. But typically, Brian, they tend to, if the market's going up, bonds are going down. If the market's going down, bonds normally they have this inverse relationship because of the way um, the coupons work on it. So the coupons is kind of like that dividend coming off of a bond. Let's see. Michael says, I think Trump would like to see the market go down, and this market at highs needs a dip a little of these highs. Yeah, there's a lot of things. I've heard people say, Trump is doing this to the market on purpose so that he can buy the bottom and ride it back up. But it'll be interesting. It's interesting to see. I mean, really, there shouldn't be even a leader should not have the ability to manipulate things. So what can I say? Let's see. Slate Groceries is a favorite of mine. Also, grocery store anchored properties and decent dividend. Good old Slate. Yeah. Um, I think it was it Slate. I think it was Slate Office REIT though that had some issues. But let me just take a gander here. I want to take a look at Slate Groceries here. I haven't looked at them in a little while. Here we go. Slate SGR. All right. Pull up the 3-year here. Yeah, here we are. So yeah, they had at one point. They had a little bit of trouble, but they've done well. They've done well coming back. I think they're going to be fine. I used to mention them a lot more than but then we got into this, and I think a lot of people, when it was down at $9, I think a lot of people lost faith in Slate, but they have come back. I'm a fan of REITs overall. All right. Paul says, let's see, Friday, 5 minutes before after hours closed, the strategy Tesla ratio got down to 1.089, sold 13 Tesla and bought 11 strategy. Nice. I like this. I like watching Paul's balance. It's like Paul, you're like an expert juggler, except for you're juggling some stocks. Hold U.S. dividend stocks in your U.S. RRSP. Yeah, I mean, if you have, and here's the thing, depending on who, I guess you mentioned that she has Wealth Simple. So that would give her, there's a couple of options. Wealth Simple. You can pay $10, I think it's $10 a month to get U.S. accounts. Or if you're holding more than $100,000, you get them for free. So that would be like Wealth Simple Pro. But I mean, if you hold it in the U.S. RRSP, then one, you're not getting hit with withholding tax, and two, there's no conversion happening. It just gets dropped in USD in that account. So that's not a bad, that's not bad. Oh boy, 4-1 for the Oilers. Gotta love it. I'm not gonna call it yet, but I'm gonna say it's looking good. It's looking good for the Oilers. Let's see. You did good. I'm down a little on Pfeiffer, on Pfizer. Buck at the 43% does not help. And now Pfizer did a big deal last Monday to get upgrades to $30. Nice. Yes, I didn't like the Slate office. Yeah, understandable. And Slate office, they did suffer a little bit as well. They especially when there was the move away during the pandemic from offices, but yeah. What does Slate Groceries trade under? There we go. SRG. And then, there's the SGR.UN. The UN, by the way, guys, in case you didn't know, that stands for unit. That's why you'll see some things like with Canoe EIT.UN. That just stands for unit. All right. Let's see here. And Bleak is in the house. Bleak is in the house. All right, let's get to our next news story. Holy banana bread. We're slowly getting there. Slowly getting there. Now in that picture, that's a lemonade stand behind the guy, by the way. But summer jobs. So students are really finding it hard to find work this year. So we are looking, quite literally, we're looking at the worst job market, summer job market. in about 2 decades. So we're talking 20 years. It hasn't been this bad. So in May, job postings are down. Oh boy, they're down huge from where they were last time. Um, it's like 22.5% down. It's crazy. So in April, the unemployment rate for Canadians 15 to 24, that was sitting at, and this is mind-boggling, 14%. So in addition to that, recent graduates, their 11.2% have not been able to find jobs in the first 3 months of 2025. That's the highest rate in over 20 years, other than the pandemic. It was pretty hard to find a job in the middle of the pandemic. The economy, of course, has slowed. Population growth has outpaced new jobs big time, especially those entry level roles. So this is where part of the problem is. More businesses, for one, there's a lot of hiring freezes that are on right now. That's not helping at all because of the tariff uncertainty. And this is creating what we call a perfect unemployment storm in a way. It's creating a serious bottleneck at the bottom of the job market. So what do we mean by that? A lot of experienced workers are being forced to take, the low-level jobs. We've got so many people overqualified for these jobs, and those overqualified people taking all the entry-level jobs are squeezing out the jobs for the students. So, yeah, it's not good. All right. Oh, froggy. Young people, they have been also, they're also in a situation where they have been disproportionately affected by a lack of promotions and a rise in involuntary part-time work. So not good. It's basically just all the jobs are being taken up by people who are already working. So it's not a good time. If you are a student and you need to make money to pay for your tuition, you're going to need to turn to a student loan. There's no way around it. It's not good. And the funny thing is early job experience, it's usually a major indicator of future success. So we're setting up the young people of today for not the best future, not the best future indeed. So what can I say? What can I say? It's not good. It's not good. All right. Did Mary say? Oh, did Mary say to smash the like button yet? Mary dropped in earlier. She's probably watching the hockey game. She's probably sitting back enjoying some popcorn and going, "Yay, Edmonton!" But yeah, guys, hit the like button. Absolutely. So good. All right. Let's see. Paul said federal government is paying companies $5,000 to hire students, visa or work visa employees. Well, let's hope they're still doing that. But even then, that's just a drop in the bucket compared to the normal level of jobs that are out there. And I remember being a student. It's actually funny when I've told the story before, but it's a funny story. So I remember when I was in university, me and my friend, we went to the job bank to find a summer job. And we're looking at the boards, and he's like, I'm going to apply for this and this. He's like, what are you going to apply for? I'm like, I'm applying for this. It's the highest paid job on the board. And it's really easy. See, it's a counselor assistant. Who doesn't mind working at a summer camp? So I applied. I got my interview. I got called in. So I went in. I go in. I'm sitting there, and the lady, it's a little old lady. She's sitting there. She's telling me about the job. All of a sudden, well, she's not really telling me about the job. She's asking me about me and just stuff. So she hasn't really explained anything yet. Then out of the blue, she asks me a question. And at this point, a lot of dawning appeared on me because I started to realize this is not what I thought. Because I thought I had applied for a summer camp. And she was like, do you have any reservations about bathing people? I'm like in the nude? And she's like, yeah. I'm like, I had to think fast. I was like, well, no, I'm currently doing a double major, biology and chemistry. Maybe I'll go to medicine. Don't know, but yeah, I'm fine with that. At that point, she started giving me more details. And it turned out what I applied for was to be basically somebody who is looking after people who have, mental challenges. So group homes. I had never, at that point, I had never even seen, as far as I know, I probably had seen without knowing, but I'd never even met a person who was challenged in that way. So it was like, I was like, oh my God, I have no clue what I'm about to get into, but I jumped in. I mean, I ended up working with them for about 3 years. So, and it was good money. It was very good money as a student, but yeah, it was just one of those things where sometimes you don't look before you leap, but in this case, it did work out. And it was great. I actually really enjoyed working for that company. All right. SGR does not come up for me. Try putting in the .un or a -un if depending on what you're using. I know, like, yeah, some search, some brokers or search engines or whatever look for the dash. Or if that doesn't work, just write out slate and see if it comes down. You might see grocery. All right. Let's see. Look at how downhill the quality at Tim's and Subway has gone. Maybe I couldn't tell you the last time I've been to a Subway. I really can't remember. It's that long ago. Let's see. Recent trends or hype about AI taking over jobs is a hot topic. Tech and AI people say learning AI will protect one from job loss or open opportunities, but if those jobs are absorbed by bots, some jobs will be absorbed by bots. AI is getting to that point where, like, honestly, I think 90% of call centers could probably be completely taken over by AI. AI's gotten that good. So yeah, I mean, yeah, and that's the thing. A lot of companies too, with, keep in mind, companies that downsize, that, during the recession, that lay off a bunch of people, as AI is getting better while those people are laid off. On the other side of this, if they lay off 100 people, they may only hire back 50 or maybe less, depending on how much more they can get out of AI, because AI is getting better. It's getting better I don't want to say every day, but I would say every quarter it makes some pretty big movements forward. So yeah, absolutely. Yeah, Mary's still here. All right. Hi, Mary. Hit that like button. Hit the like button. Yeah, I love it. All right. Paul says Canadian students, hopefully their parents started an RESP when they were born. Our daughter is 19. The investment is TD money market now in the RESP. I do not want to lose any of it. Yeah, absolutely. Absolutely. And yeah, an RESP makes a lot of sense, because you don't even need to put much in it, and let the power of compounding over that 19 years. It'll give your kids a really good start if they want to go to university, and a good start, which basically translate into a lot less debt by the time they get their degree. All right, King of Day is in the house. Hello, all, joining really late, but I'm here. Well, good to see you. Good to see you. And Rory, just keeping tabs on the game at the same time. There can't be much time left. We got to be deep into the third. Rory, how many minutes are left? Let me know. Let me know. I could look, but I want to give you guys. Well, I was thinking I'd give you guys a tiny bit of a Canada Post update, because as you guys know, we are moving towards a potential strike. So right now, the CUPW, so you're basically, that's your union, Canadian Union of Postal Workers is what it stands for. They have instructed their 55,000 members to refuse all overtime. So no work beyond 8 hours in a day or 40 hours in a week. It's not a strike yet, but it is the first major pressure tactic ahead of some legal strike action. The strike is absolutely still on the table. They actually entered a legal strike position on Friday, so we're already there. Right now, no rotating strikes or full work stoppages, but Canada Post did say that with them not doing overtime, there could certainly be delivery delays. So negotiations, well, they're currently stalled. They're not getting anywheres. The last meeting they had, basically, it lasted 30 minutes and made no meaningful progress. The CUPW is saying that Canada Post's current offer is falling short, especially around the wages and the whole issue over the part-time weekend work. So right now, some of the key demands. So the union, they want 19% wage increases, basically due to inflation. They also have a strong opposition to Canada Post, who wants part-time weekend positions with basically up to 30-hour weeks. So definitely something, some key points that they're really, yeah, they're really not willing to bend on them. Now, Canada Post, oh boy, Canada Post is kind of screwed. So basically, in the first 9 months of 2024, they had an $803 million loss. And since 2018, we're looking at about $3.8 billion in losses. Even in January, they received a federal loan of $1.03 billion that we know they're not going to pay back to sort of secure their operations. So something needs to happen. There needs to be changes. Now, there was a government commissioned report that was supposed to help the situation. They basically came back and said, yeah, Canada Post is effectively bankrupt. They recommended more part-time roles with fair compensation. They also recommended ending daily home delivery for letters and shifting the focus to parcels and closing some of the rural post offices. So that was kind of what the government's report said they should do. Now, right now, I don't think any of that's on the verge of happening. So we could be looking at a full strike soon. We're looking at, well, it would disrupt delivery of up to 8.5 million. Really, there's 8.5 million letters still daily. That's crazy. And 1.1 million parcels per day. Yeah, we're looking at probably losses of 1.6 billion or more for some of the small businesses. So not good at all. Oh boy. Let's see, about 9 minutes left in the game. Okay. Oh no, what are we going to do without mail? Yeah. I mean, I don't get much mail other than I get the occasional government thing. That's about it. But well, I do vote by mail. I vote by mail. So I do kind of like that. Let's see. Michael says, I guess I'm getting too old to do anything anymore and can't do too much right. You're never too old, Michael. You're never too old. Yeah, my mom is like, oh my God, she's probably 75 or 76, something in that area. And you can't stop her. She does a weekend show each month on a Sunday. She does a country music jamboree because she's a singer. She still works during the weekdays on school buses. Right now, she's actually, I think she's in Texas. I think she went down to Texas. She's brave. I wouldn't try to enter the US right now. I think she went down to visit my sister in Texas. So yeah, like I said, you're never too old to do, you can do whatever you want. And heck, my mom actually has Bitcoin. So, you're not too old. You're not too old, Michael. Brian says, I was a welding supervisor and one of my workers says, we are getting ready to strike and working to rule. I said, perfect. So you will only take a 10-minute break and be at your work area on time. Let's see. Star Trek transporters will put Canada Post into bankruptcy. There we go. Yeah. Can you imagine if well, yeah. I don't know about transporters. I mean, well, here's the thing. There's no reason why mail can't all go through the internet. Like quite literally, just have a printer on one side and print off your mail or something. But there's no reason for somebody to be hand delivering stuff. There really isn't. Not anymore. Brian says he laughed and called me a name. Yes, he was a decent guy, and I thought it was funny how I reversed it on him that now had to 100% follow the rules, in my opinion. Yeah, why not? You gotta like it. You gotta like it. All right, we got one last news story. One last news story, and then that is, and that'll be that for the news. All right. Obviously, it's a story about the TSX in a way. So, foreign investors have started to pull back big time from the Canadian stock market. So, we're talking about a record 35 billion in foreign cash was withdrawn from our market last quarter, and that's according to Stats Canada. So, the reason it's not hard to guess what the reason is. It's, of course, all of the US tariffs causing a lot of uncertainty in the soundness of Canada's economy. Like we've already had comments here today that we're in a free fall, that we're sliding down a hill really fast. So yeah, a lot of foreign investors are like saying, yeah, we're getting out of Canada, we're getting out of Dodge, so we're just not going to take the chance. Nonetheless, even with this 35 billion exiting our market, guess what? The TSX still grew a bit. Why? Well, by Canada to the rescue. So a lot of Canadians are doing the same thing to the US. So a lot of Canadians have sold off their US stocks and brought that investment money back into the TSX. In fact, they've brought enough money back in to offset all of the foreign deserters. So the foreign investors all gone, Canadian investors coming back into the rescue. What can I say? Not too shabby, but keep in mind, we don't know if that's all of them. There's probably still some left to go. So things are still a little up in the air, but people are choosing. A lot of Canadians are choosing to invest in Canada opposed to the US because of the times that we're in. Overall, though, investors do crave, big time crave, certainty. Because you guys know, anytime something funky happens in the news, the market goes up and down as a result. That's because as soon as you throw people off of the normal track, they don't know what to do, and they panic with their money. That's exactly what they do. And right now, a lot of people, especially Canadians, are looking at that US market and saying, this is a little too erratic for me. Things are gonna hit the US pretty hard. So a lot of them, like I said, bringing that money home. Canada's stock market, we may not be able to deliver right now, but here's the thing. We've got a relatively small home base, and we can technically, domestic investors, they can sort of sit and they can wait it out. I don't think we have enough power to prop up the market all by ourselves, but there is safety. There is pockets of resilience in there. And going back to that government, oh boy, now that government, if we can get what needs to be done, if those liberals can live up to those promises during the election, maybe things can look pretty good. But right now, let's hope. I'm hoping things just sort of stabilize a little bit. If we can get some kind of a deal with the US to at least get rid of the uncertainty, that'll make it so that we stop bleeding foreign investors, because that's not something we want to see. Not something we want to see at all. Oh boy. All right. And as I mentioned before, coming up this week, it's bank earnings week. So actually TD already released their earnings. The rest of them are coming up this week. Always love bank earnings week. My second favorite. I really love the on the US side, I really love the tech week. I love the tech week. And speaking of tech, so I mentioned the video for where am I? Yes. What the heck? I hope you guys can still hear me. But yeah, you're right. I disappeared. Oh, I know. All right. Give me a second. Let me get rid of that guy. That's funny. All right. You know what that was? I'll tell you exactly what that was. I make these pictures as an overlay, and and I put a transparency on everything but the picture. For some reason, the transparency on that one was not working. That's what it was. So it was giving us a blank page with just the picture. So it's fixed. It's fixed. Anyway, we're done the news. We're done the news. In fact, we can come back here. We can come back here. Just give me a second here. Let me remove this. All right. And there we go. We'll put this back like this because I'm supposed to have a couple of screens. And then this screen down here, this is my share screen. This is my big screen. All right, there we go. Everything is fixed. I love it. I love it when everything gets fixed. But yeah, that's the news, folks. We're through the news. Holy banana bread. What can I say? Now it's up to you guys. Canada Post has to work weekends to remain competitive. Yeah, Canada Post, you know what? That government report's not far off from the truth. Canada Post needs to stop delivering mail. Or, I mean, you can deliver mail, but maybe once a week. Once a week mail, that's it. Or switch to parcels. Try to become competitive with parcels. Maybe see if there's other things that you could boil in to make money. But right now, and that's the problem. The problem is the union will fight it tooth and nail all the way. They're going to fight it because to reorganize Canada Post is absolutely going to you're not going to need as many people if you do things right. If you actually create a system, and that's going to hurt union. Yeah, it's a mess, guys. It is a mess, and in a way, what we kind of need. I don't want to say we need a strike, but we almost kind of need them to pack up Canada Post to pack up their bags, call it done, stick a fork in it, and come up with something new. Come up with something new and fast, because we still need mail of some kind. So there has to be something. See, that's the whole mess, right? Even if you just shut it all down, what are you going to do for those rural people in rural Canadians? What are you going to do with people who still get checks through the mail, like government supports and stuff? It's a mess, guys. It is a mess. What can I say? All right. Yeah, exactly. There you are. And Rory says 5-1 Edmonton. It's pretty much over. Oilers lead the series 2-1. Nice. All right, Edmonton to the final. I'm not going to jinx it, but come on, Edmonton. You can do it. All right, Bismarcky says Canada Post dog walkers. Dogs love posties after all. Why not? Why not? And here's the thing. If Canada Post had been smart, they already knew before the pandemic they were losing all of this money. And with the pandemic, they should have pivoted. They should have pivoted then, took whatever pain was necessary, because you got a lot of companies that sprouted up for all of the Amazon deliveries and stuff over the pandemic, and they took a lot of business that could have went Canada Post's way. So they kind of missed that big opportunity. So yeah, I don't know who's going to deliver junk. Yeah, who needs junk mail? Like, quite literally, I get enough junk in my spam folder. I don't need it in the mail. Although I will admit, there's a lot less. Like, I don't get flyers anymore. I used to get flyers all the time. Like, every week I would get a bunch of flyers in the mail. Now I don't. Unless it comes with an official stamp, I don't get it. And I like that. I'm hoping it's that way for everybody now. But, I can only speak for myself. And see, Michael says PED is an oil company with zero debt that trades at 0.64 and making profits with plenty of cash. Did get upgrades to 150 to 225. That has 4 new wells. Nice. Nice. PED. Let's just take a gander here. All right. So here we go. Petavico. All right. It's a little bit of a pen. Well, Yeah, it's technically still a penny stock. It's under $1. It's under $1, but well, it's hard to say. It's hard to. I don't. It's hard to get excited, but at the same time, you know what? Oil's had some issues for sure. Could be interesting to watch, Michael. Could be interesting to watch. Especially, I really really want to see oil rebound. I really, really do. Bismarcky, I need my McDonald's coupon. Yeah, that's right. They used to always send coupons. I remember those. Let's see. The U.S. admits it's an essential service, and it does not matter if it makes money. Canada is basically the same, and it is. It is an essential service, and I'm pretty sure there's something legal in there. And I think a part of it goes back to that was how they used to declare war through the mail. Funny enough. But yeah, no, yeah, absolutely. So you need to have something, but you can transform it. I don't think you can get to a point where you can completely, absolutely shut it down 100%. Because even when they go on strike, there are certain things that are sometimes still delivered. I know the last strike, I believe the government stuff. I know there was arrangements to have that stuff delivered. So some of the supports and stuff. What do you think about natural gas at the moment? And ALV, I haven't looked at them in a bit. Let's go here. ALV. So this, of course, is Alvo Petro. They've got a pretty good dividend, if I remember correctly. Yeah, 9.727. So I do like this company. I actually held them for a while in the 0 to 100K challenge. Now I got rid of them because I could sort of see the writing on the wall that oil was gonna come down a little bit. But this one here, I mean, they're not doing too shabby right now. They're not doing too shabby. That's actually not too shabby at all. But yeah, I do like them. And they're also, they've just got a really nice dividend. I actually think their dividend is too high. Here's a question. I don't know what their payout ratio is on that. Let's find out. Let's go over to Yahoo Finance. All right. Yahoo Finance, ALV. All right. ALV. Actually, it's technically .v. We'll try that. There we go. Here it is. All right. ALV. Let's take a gander. We'll go over here to statistics. Come on. All right. Here we go. Actually, no, look at that. Their payout ratio is sustainable, 83.72%. That's not too shabby. Not too shabby. Also, if we go back here, take a gander over here. They've got a good, look at that. That's not bad. Look at the profit margin on ALV, 36.86. Their return on equity, not almost 20%. That's pretty darn good. And then return on assets, 14. And here, check this out. Debt to equity ratio, 9.91%. I like that. ALV, yeah, I like them. I did, like I said, I did have them in the challenge. I got rid of them only because I was kind of consolidating into actually a lot. I think those shares went into XEG. So, but yeah, I do like ALV. I think yeah. And the fact that, you know what, that's a great dividend for a sustainable dividend. That's not bad. All right. Rory says, Mail Wars, the Postmaster Strikes Back. There we go. I love it. Canada Post need to go deliver mail 2 times per week. Jobs will have to be part-time. Sign me up to walk with mail. Yeah, why not? But that's the thing, though. You don't, I mean, if you switch to a delivery service, you could have a situation where, you deliver mail 2 times a week, but you deliver parcels 3 days a week. So think of it that way. That's just something that you could potentially do. But the problem is parcel delivery nowadays, you kind of got to do it on the weekend too. So that's the issue. And I think they just don't want that. I think a lot of them are like, nope, we fought for all of these cushy jobs that we have now. Not to say that walking every day, all day is a cushy job, but you know what I mean. Let's see. ALV has X. Sorry, yeah, zero debt and uses half the earnings to expand, the other half to divvies. Yeah, absolutely. No, no, it looks good. It looks good. Absolutely. All right, guys, we're at 2 hours. If you got your last minute questions, get them on in. Get them on in. I'm gonna have some coffee. If you got some questions, burning questions before we go, get them in. That would be fantastic. Bismarcky says hire students to work on the weekends. I agree. No, I agree. I think though, and I can't remember exactly what it is, but there was some issue that the union has with part-time workers and the way their contracts work. So I think there was something that they had that was kind of a big problem for them. But I'd have to look that up, figure that out. I don't know what it is off the top of my head. Rory says, getting your butt ripped off by angry dogs. I'll pass. I remember. Actually, a really funny thing. So I was doing a pilot project, and we were going to people's houses to deliver off basically an information thing for them. So we're just doing we're doing mail, right? We were giving them mail, but it was just information pamphlets on the project and how it would affect people in the neighborhoods. So I was delivering some with this guy. I think his name was Alan, and we went up to this one house, and big dog came running out, chasing Alan. He's screaming like a banshee as he just runs. I'm just standing there. He runs right past me. The dog runs past me. He makes it into the truck. I just walk over. I get in the truck, and he's like, afterwards, he's like, "Why didn't you run? Why didn't you run?" And I said, "Well, the dog wasn't chasing me, so I didn't need to run." But it was hilarious. Oh, boy. Rory says, "Yep, haha." And Bismarcky says, "Well, the union doesn't have a leg constant on. They're about to go out of business." I think you mean a leg to stand on. A leg to stand on, not constant on. Um, yeah, absolutely. Why not? I mean, that's the thing. The union, this is the thing. You gotta, the union leaders just have to look at reality. It's like, all right, we're asking for all this money from a company that is pretty much functionally bankrupt. There's got to be, some movement. Something has to change. Something has to change with them. Oh, I don't know. Autocorrect. That's funny. And our Morrissey, probably to the dog story. The private sector has been downsizing for years now. Government jobs need downsizing too. Yeah, absolutely. I mean, I remember growing up, the word on the street was, get a government job and you're set for life. Like, that's what people used to actually say. You get a government job, you're set for life. There you go. That's the key to winning life. It shouldn't be. It shouldn't be. Change with the times. Yeah. It's going to be hard for the older generation. Yeah, no, absolutely. Absolutely. Like, I think a lot. It's kind of interesting too. I actually think like the boomers are lucky in one sense. A lot of boomers, they've got all of their equity, they've got their house, they've got a lot of stuff. Now boomers who are retiring who did not play the game right, who did not have a house, maybe didn't have good jobs, they're going to struggle. It's going to be hard for them, especially in this world. Now some boomers as well who did put away and did things right. The game has changed. Things are going to be more expensive than they probably anticipated. So there's going to be some, but then once the boomers are finished, then Gen X starts heading in, and oh boy, that'll be another interesting group. That's going to be another interesting group, and I'm in that group. So I'm a Gen Xer, and I have a feeling, well, according to my analytics, about 30% of you guys are Gen Xers. So I got about 30% boomers, 30% Gen Xers, and the other 30% or so are spread across the rest of the generations. So there we go. All of that fun. Gen X will get the inheritance from boomers. Well, will they? I was watching a video earlier, Rory, that says a lot of boomers are skipping the Gen X, and they're starting to they're setting up their inheritance for the kids of the Gen X. So it may not be so cut and dry. Hopefully it is. Hopefully I would love to get an inheritance, but I know my mom has already said she's giving the stuff to everything to her grandkids. So I'm like, okay, okay. So yeah, it's interesting. It's interesting. But yeah, normally that's typically how it should go. Parent to child to child to child. Just go down the stairs that way. But but I one of the things I've told my mom is like, you know what, you got maybe another 10 years or so. Enjoy yourself. Don't just, create a nest egg for the sake of handing it down. You might as well use some of it. I figure that's what I'll do. Like if I'm 80 and I figure I got 10 years left, I'm going to enjoy myself. I will, because, why not? Why not? Also, I don't have any kids, so I have that going for me too. Let's see. Rory says that why we build our own infrastructure. Yeah, there we go. Absolutely, absolutely, and that's what we need to do. I like it. Paul says 2.5 years away till age 60. Silent generation parents still around. We get a little bit of money from dad after tax time each year. Yeah, you mentioned that. You did mention that to me once. So not too shabby, not too shabby. The silent generation. Now with Gen X, we're basically we had no rules generation. It's like Gen X, the way it was when we were kids, we go outside. We do stuff outside. We do dangerous stuff outside. We get cuts. We get dirt in the cuts. But we keep going until the street light comes on. Then across the neighborhood, you hear the parents, you hear the moms yelling out their kids' names. And we come home at the street light. As the street lights come on, that was our thing. Yeah, street lights, you come home. Simple as that. That was the rule. There was no tracking us, no nothing. It was just we all knew street lights were home. As simple as that. Paul says 1941 and 1943. They're up there. They're up there for sure. All right, guys, this has been another fantastic show. You guys rock. I love doing these on Sundays. We will be back on Wednesday for a market close. Watch soon. We're probably going to have a bonus market open one of these days, because somebody in the comments was like, you should do a market open every Monday. I probably should, but Mondays is not the easiest day because that's a filming day, but I do want to squeeze a market open in again, because I know that those are kind of just fun too. So I don't know if I probably won't do it this week, but definitely in June, there'll be a market open squeezed in there somewhere. Yeah, exactly, Bismarcky. You got it. Streetlights. It was the golden rule. And Paul says, my parents outlived their parents by 20 years so far. Nice. Well, there you go. If you can outlive your parents by 20 years, then you'll have outlived your grandparents by 40 years. Think about that. Think about that. There's your goal. There's your goal, Paul. So don't break any more bones, and you should be fine. All right, guys. And be sure to check out Tuesday's video. If you're a channel member, by the way, you can watch it tomorrow. You can watch it tomorrow because channel members do get to see things one day sooner. It's those stocks with the low PE ratios. It's the undervalued group. And I got some absolute bangers in this list. I like the list a lot. All right, guys, until next time, enjoy the rest of your weekend. And, congratulations to the Oilers as well. Just to give them a little shout out on the way out. Up 2-1. Love it. All right, guys, we'll see you guys again soon. Take